Good morning, everyone. This is Anne Marie, and here's a look at SPY very, very quickly. The bears have come out in full force and saying, no wonder. Have you seen the volume? It's blah, blah, blah. Listen, I wish I was good at prognosticating, but no, I'm really bad at it. So I'm not going to. What I am going to do is I'm going to look at these candlesticks and I'm going to say the following. From March 5th, around March 5th to present, we're pretty much flat to up if we're measuring. If I buy it here and I'm holding here, I'm still up. I'm trading above both of my VWAPs. I came down, kissed one, came down into this congestion region, but met by buyers, so I did not slip down into support level 4, nor did I reach the base low of this candlestick, right? The wick low. And so met with buying opportunities, popped up, yes, volume is low, but see, I don't really care how much volume is sitting there. The volume doesn't actually tell me whether I'm going to hit the specific price or not. Volume helps me see if I'm going to stay there or if I'm going to accelerate past it with any measure of strength. But people, in my mind, use volume for totally the wrong reasons, and so it ends up giving a few false notions about what it is that should be going on. From my perspective, we look at volume, we want to see, hey, listen, how did it hit that particular price? Did it accelerate off of it? Did it close hard with a great deal of it? Take a look at this one. Do you see this volume action right here? Very negative towards the end of the day, and then we had the big drop off. It popped back up. So this is clearly a warning sign in terms of the move down because it continued into the base of this region, but then began to pop. So although this is a negative candle that did come down here, the pop up is telling us, well, you know what, we might have ourselves a little bit of a recovery. So far, a little concerned that the ratio of positive action to negative action in terms of volume is shifting, but that doesn't really tell us a ton of things other than cautionary measures ought to be watched. In the end, all we're going to stare at is price. The price action we need to consider is this pivot right here. Do we recapture it early in the day and hold? If that's the case, our goal is going to be filling this gap. If we get to the pivot and reject it, our goal is going to be concentrating down on these levels to fill this gap. All right? Once in a while, when we see wave extensions, they'll come into 1618 and then they'll drop all the way back down into 61.8. All right? Do I think that's a possibility? I don't know. I mean, anything's a possibility. We've got a lot of congestion in this region, but the work that needs to be done is the filling of this gap, particularly in SPY, which likes to fill its gaps pretty routinely. All right, now this level right here that we don't see from here is a breakout event from way back to the left. So we know, for those of us that work with me, we've got a potential S-curve event coming right here, and how it behaves at the base of this gap is going to give us a tremendous amount of information about where it is that we go next. See the sloping action down here, this negative divergence since about the 7th on this 4-hour chart is telling us that we have negative drift. But remember, if you review those, I mean, this information becomes so dated quickly, you never want to go back and take a look at something old. But if you take a look at the past, my commentary was, listen, when we start seeing these rolls way up in positive trending territory, it means that we are coming down to test support regions. Could those support regions collapse and it turn into a negative trend? Yes. But is that showing right now? That would be a big fat no. Okay? So, if we want to take a look at, let's say we take a look at this. Let's shift this fib. over here. All right, somewhere around there. This level, we don't really need to see that one. This level, well, we could probably use that one. That one looks like right about there, popping up over the top of it. But here's the 38.2. Very natural retracement event. Very, very natural retracement event for us in this space. This region right here give us a 50% retracement off of our larger wave. If we have dampening action and we are going to roll, this should be a steeper pullback, going to roll right here. This should be a steeper pullback unless we're flattening out, and then it could be something as simple as the pullback into 38.2. This is very, very likely. What's the moral of my story? In the end, you shouldn't be large size anything. The charts are moving very nicely. In the end, we're still making overall higher highs and higher lows. The wave action events in the long run have been extremely positive. So all we have to do is say, hey, listen, can I breach this level? If I breach this level, I know I'm going to trend long because I have this gap to fill. That's the business to be done. If I breach this level, I know I've got this support action I've got to test to see how well it holds. If I lose it, I'm going to go down to the midline in between the gap, and if I lose that, I'm going to fill the gap. And all of these things have confluence associated with them. All right? So use caution, be careful, walk step to step. If you're trading smaller time frames, hey, listen, just follow your candlesticks. If you're making higher lows and higher highs, you know you're sitting on the right side of the trade if you're long, and vice versa. And if you've got garbage, then you know you're sitting in a range, meaning I'm getting both lower lows and higher highs. You know you're sitting in a range, and so your choice is, hey, I'm going to trade on the edges of this stuff. If I break my main line support regions, I know I'm going to come down into my front line support regions, right? In terms of that being support that gets broken here, and this being the primary support action. And that does pop pretty well right there. So, all that to be said is this. Listen, I want to tell you one thing about paying attention to these formations. It's really important for you to look at the wave and to see what it is that's actually happening on a shorter term event. And you can see, look at the gap action that we're seeing here. It's unsettled, uncertain, and so what that should make us do is tread lightly. Good luck trading.